Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, April 11th. My name's Eric Wilkinson. Some of you may recognize me from CNBC, Fox Business, or even the Wall Street Journal. I'm here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with crude oil. Actually, a couple of things. Yesterday, sorry about yesterday, I missed it on the daily market commentary. I had all kinds of things pop up yesterday that I was not really aware of. Sorry, I thought somebody was knocking at my door. I was like, here it goes again. Can't stop it. Anyway, so let's talk about a couple of things across the pond. We got industrial production yesterday out of Great Britain, better than expected at 0.6%. We also had an ECB conference and a lot of good economic data coming out of Great Britain yesterday, beating numbers on construction output, manufacturing, and refinery rate. A lot of good things coming out of there across the pond. Yesterday, we also got core CPI, which is Consumer Price Index. That was in line with expectations. The core CPI was just slightly lower. We also got crude oil inventories. We saw a 7 million barrel build, expected to be a 2.6 million barrel build. Now, we've been consistently seeing these builds way over expected recently. One thing to note, though, yesterday we didn't really get that sell-off because everybody was talking about gasoline. There was a draw in gasoline. So that was really kind of buoying the crude oil market yesterday. Today we're starting to see some more weakness coming into that market, as I think people are realizing, well, just because people kind of pulled on that gasoline does not show consistent demand going forward. We also got FOMC minutes. Kudlow from CNBC, who is now working with Trump, came out and said he doesn't really see interest rates going any higher in his lifetime. And he's about 71 years old, so he's talking quite a while. He's pretty healthy gentleman as far as I can tell anyway. And then today we move into a couple of economic data points here in the United States. We got PPI, which is Producer Price Index. And that being said, PPI came in line with slightly higher than expectations at 0.6%, expected to be 0.3%. And then the core PPI, Producer Price Index, is 0.3, expected to be 0.2. Now, both of those economic data points are inflationary numbers or a gauge of inflation. As we see the producers' prices increase, that means they're probably going to offset that to consumer. And usually considered a very good thing because that shows price demand. People are able and willing to buy, therefore price drives higher, and that shows that we are on a good, we have a good economy. All right, unemployment claims came in at 196,000, expect to be 210. Lower at this point is good. People aren't claiming. That means they're probably employed. And then we've got a plethora of Fed governors. I think almost every Fed governor is speaking today because yesterday we got the minutes and now they're basically carte blanche on whatever they want to say. So we'll be seeing a lot of Fed governors coming in and around talking their position relatively soon. Crude oil, like I said, starting to see that weakness from these continued builds. The refining rate is quite high, but we are seeing these builds happen. I don't think that Libya is going to really affect us that much. Gold futures coming off dramatically today, off $17, back below that 1,300 psychological level, back into the value area. I've talked about this several times, and I think it's going to happen. I don't really see us moving much lower than between these two Fibonacci's, the 78 and the 61. I think we're going to stay in there for the better part of the time coming up here. I'm trying to find where my little marker is. It's not wanting to come up for me, so we might have to do with that without that today. But we've talked about this. As you can see here, it really looks like the volume, almost even today, could pop this point of control up higher to this level here, in and around that $1,300 area. But again, I don't really see us popping outside of this little range here anytime soon. But again, I don't really see the equities or the bonds or anything else moving anytime soon unless we get some really good data or really bad data. But we're getting that middle of the road kind of data right now. heading right into earnings season, which could be a good thing, actually. And I'll talk about that a little bit later when we talk about JP Morgan's coming out later on today. VIX into 13, so we are still in the teens. It was a little bit off today, but we saw a bit of a sell-off here in the last 30 minutes to an hour. So the VIX is starting to rise a little bit more as people are starting to see the weakness. You can see with the Dow Jones Industrial Average here off by about 41 points, really being supported by the value area high here. It's going to struggle with this keeping some traction today if we want to, because it looks to me like it wants to come down and cover this little gap that we've got here. So I think we might see that coming up at least next week as the market kind of rolls over a little bit. People taking profits. This is a long run to not take profits. People have got to be dying to take profits, especially now that we are outside the value area. Here we go with the NASDAQ. We've seen the NASDAQ shift higher to a point of control higher. I was talking about that with the Dow making that same shift. I think we'll see that happen relatively soon. But I have to say, I think that people are just dying, like I said, to cover at these levels right now. It's just too long of a time to really hold on to it. People have got to be getting itchy trigger fingers. And now we look at the E-mini S&Ps, down off only about 5 points. But when we go and look at the chart here, you can see overnight inventory relatively flat, but we've seen the market really sell off, like I said, in this last half an hour, 45 minutes, even an hour. So the market's seeing a little bit of weakness. I don't think that the market's going to sell off. I don't think you'll see a 500 down day in the Dow or a 500 up day in the Dow. I think what we're going to see is this consistent sideways pattern as we see the point of control shift higher to these levels that we're very close to right now. So that means price being accepted at these levels kind of relieves a lot of that downward tension that we normally see with that magnet way below and being extended above a value area high. The market really wants to drive back down there. But when we see the point of control shift higher, that means all of a sudden the value area is moved higher because we are accepting prices at these levels, and it is basically a very bullish sign there. All right, so E-mini S&Ps showing a little bit of weakness, but I think for the better part of the day, it's going to be pretty weak. Like as of yesterday, I think these last 5 days accounted for the 5 of the lowest 8 volume days of the year. So we aren't seeing a whole lot of push in either direction. Also, that why we're seeing a tight range. I think a lot of people are speculating at these levels and just with not a whole lot of oomph behind it. Probably very small tranches as people are taking little tiny jabs at this market. All right, let's talk about a couple of trades that I've done. The EA Sports trade that I had on, if you guys remember, I did this for the webinar in the last series, and it was on the iron butterfly. So with that being said, I went into the April and basically I had bought the 115 calls, sold the 102 calls and puts. That's the straddle part of it. The 115 calls defines that risk on the butterfly. And then to the downside to define that risk, I bought the 89 puts. All right. So that being said, all in all, with that iron butterfly, I collected $7.28. The reason being, I thought it would stay within these two value or Fibonacci levels and stay very close to the point of control here, which is what has happened. We bounced around, tested those areas, but have since come back down in and around this area. Remember, I'm short the 102 calls and puts. If it settles or nails that number, that's where you collect the most amount of money. But in these webinars, I talk about taking less than the full profit on this because the probabilities of success with taking that full profit at the end of the day are very slim and none, and probably slim just left town. So you really have to have that market settle at 102 even for everything to basically collect all of it. That doesn't happen very often. The market's bounced around, so I've been able to get out of this for about 40% of max profit, which is in and around 25 to 50% of max profit is usually what I'm looking for here. And it's gone up there very close to that 50% of max profit, or actually about 45% of max profit, very close to that. That being said, I went for the 40% of max profit and got out for $4.43 today. I actually bought those back for $4.43. Originally sold them for $7.28. So that puts it right around that 40% of max profit. All right, so that trade I'm out of. I got out of that yesterday late in the afternoon. You can probably get out of it a little bit better. Before I went on today, I checked it. It was trading right around $4. So you can make another 40 cents better than what I did, basically. And then something I'm also looking to get out of is this IBM trade. I'm looking for it to go up and trade 145. It's come very close, 144.5 a couple of times. Then we've come back down. Right there at the point of control is the 145 handle. That's why I set this strategy up. If you guys remember with this trade, it was a while ago now at this point. And where's my thing? Let me find my trade on this to find the date that I actually put this trade on. It was on the February 19th. So I've had this trade on for quite a while. If we can pull back to February 19th. So quite a while. We've had a nice little run at it. I was expecting it back in this area, February 19th, to rally up and hit the point of control. That's why I picked the 145 strike. We have gone up there, come just shy of it. I think right in here is probably the closest I got was in the 144 handle. I wanted it to kiss me at 145. It didn't happen. We've rolled over. I'm looking forward to make that move again. Hopefully today, overall equity, it was looking pretty good when the overall equities were pushing a little bit higher. We've seen that weakness in the last hour, so it's gotten away from me. But with this trade, if you remember in the May, I got in and bought the 145 calls back in February for $2.70, and I'm trying to get out for just over $4 right now. The delta on this trade, right now it is, I think the last strike or the last print I saw on that, I was about 50 cents away. So I need at least $1 move higher. So trading back up to 144.5 for me to get out at that $4. So that's what I'm looking for. Hopefully it will happen today. But I think we will see that 145 handle before we see any other moves downward or sideways for the most part. I think we're going to continue to ratchet up to that. It's got to trade there. All right, so that's what we're looking for. That's all I got for you today. I haven't added anything. I am going to be looking at JP Morgan. I am leaning towards doing the doing a strangle on this one. So basically selling a short call and a short put. I haven't decided the strikes, but if I were just to take a look at it right now, you throw up the Fibonacci, that's not going to come. If I can throw up a Fibonacci real quick. Let's just throw it up. I'm going to do it real quick and dirty here. So something like that. All right, so Fibonacci, I didn't line it up perfectly. But at the end of the day, we're very close to this point of control. It's set right on this 50 Fibonacci. It's going to allow me to probably get up here and look at the 109, 110 calls and let's say the 97 puts is kind of like what I'm going to be looking for my strangle. I haven't made any decisions as of right now. Actually, I'm probably going to be around the 100. I'm not going to be able to get that far down. It's probably going to be the 110, 100 strangle. I haven't decided right now. It's actually going to be further than that. I'm going to be able to get a lot further than that. I haven't looked at it quite at the strikes, but that's the idea. I think that we are going to stay in this range. The banks can't be making tons of money off of these low interest rates, but they are going to be doing better than what they were doing since 2010 with those extreme low rates. So, but I don't think it's going to be a major surprise coming out what happens here with the markets. I mean, everybody's got a pretty good idea. I think they're going to be in line. And that's it. That's all I've got for you guys today. There are a couple other bank stocks, but I'm going to be concentrating on JP Morgan. So follow me on Twitter at Wolfman's blog because I'll be tweeting out what I'm doing with this. Check out the webinar that we're going to be doing later on today. It is, if I come up with a bullish assumption, what strategy is right for that assumption? There's all kinds of things going on in and around with this market that we're going to be talking about. The options, the Uber of trading, and I'll explain some of that stuff too. It's all about price elasticity. All right, so check it out at protraderstrategies.com and sign up for that. That's all I got for you guys. Hope you have a great day. If you can't take that, take it easy.